What have you got for us this week?
All right. I think it's pretty interesting that Julian mentioned iron because I was kind of looking at Australian dollar. So a couple of things I would like to quickly share with what I would like to look at this week is will the Aussie dollar continue heading towards the upside? So the first thing we have to know is if you are trading the Aussie dollar, you kind of have to know what they spend on, and you can see that they actually spend about 35.9% exporting iron ore, right? So if I'm actually looking for what's moving forward, what kind of iron news that we're kind of look at, then a couple of interesting headlines would have come up for me, which is over here. This was done 2 days ago. It spoke about how iron ore has actually slumped, all right, over the last couple of periods. So this is a iron ore chart from Financial Times. You can see that iron has actually just dropped off very drastically in the last 2 weeks, actually, from 120, and now it's just about 95-ish, right? So the question then is, who is the largest importer of iron ore? And that is actually China, right? So when we talk about China being one of the largest importers of iron, and we have this big price drop that happened previously because of the Evergrande scandal, and for whatever reason, the question now I would say that will this mean that Aussie dollar will continue going down, or being Chinese, right? Being Chinese, we know a cheap deal when we see one. So if you are if you are in any kind of sector that requires iron ore and you see price, pump down all the way to 90 plus, right? Being Chinese, you will think, hey, this is actually mean I can get my iron cheap, right? So the question is, if there is a potential of buying over here, if iron is cheap now in comparison to the last entire year, you can see that the last entire year, if I just stretch out a 1 year chart over here, you can see iron has been 120 all the way to 200, and then now it's back down to below the so-called average-ish price. Iron is actually considered cheap right now if you just compare it to the last 1 year. If you look at a 5-year chart, you can see that iron is very near to its lows of 2020. So there will be potential buying opportunities here if the China economy is continuing to recover and expand from COVID, right? So when we look at the charts, I always like to compare. The two currencies where we have the the Australian USD over here, and I like to compare it together with the Chinese yuan and the USD. All right, I'm just lining it up Chinese yuan and Australian dollar. I'm just lining up the months here to get a kind of a perspective on it. So if you look at the Chinese renminbi chart at the bottom, it is kind of hitting a very nice key level, very, very bullish price action looking. This kind of indicates that there is potential for the RMB to kind of pop above here. I will be very interested if that happens on Monday, because what it means that people are going to be buying the Aussie as well, which means the slight correlation has potential over there, which also means that we could see potential continuation of a buying of Aussie dollar. So for the next 1 or 2 weeks, I'm going to look for an opportunity to buy the Aussie, of course, waiting for its its pullbacks. And if we do just look at the other Aussie positions, right, you can see that it has come down, it has retraced quite a bit based off the bad news that's coming out from the China correlation. So there is kind of a buying opportunities off at these certain horizontal levels. So I will be interested to see whether there's buying opportunity for the Australian dollar. I think last thing to note is this. I found this, which is a bit interesting, because I am actually watching the USD as well, trying to figure out why the USD actually went higher. So this is a Peterson G Foundation. They actually have a running count of what is its current national debt. I thought it was quite interesting. So basically, if you break down this $28 trillion in national debt, it's about 87,000 of debt per person in the US. And of course, it goes to question now then, where will the USD go? Will this USD run continue? I think I just want to look at certain interesting levels, and I'll use my favorite US dollar sing to kind of look at this, because I think what's really interesting is for the last, I hope I saved it. Okay, I did. Okay, for the last, I'm going to use a weekly chart, quick one for this one. Okay, for the last for the last 10 years, all right, for the last 10 years, I've got little arrows here that tells you, when we come into the year-end seasonals, all right, what is the seasonal move of the USD against the Sing dollar? So if we start off in 2010, where the recovery of the market kind of started, you have, the first part, we have increasing US dollar strength coming to the end of the year due to these seasonals. With a couple of years, it went flat. And then the last 3 years, 2018, 2019, 2020, into the COVID years, we have the end of the year seasonals where the dollar started to weaken, right? And then, of course, coming to 2021, you have, what catches my eye is that, it's very, very flat. It's very, very flat with very little steam towards the upside. So my question would be, with the ballooning national debt, will the US dollar still be able to continue its rally moving forward towards the end of the year, into the new year? So I think, like what Julian said, there is something interesting boiling up in the stock market, in the equities market as well. So trading USD, probably be a bit more cautious right now, because there is something boiling, and it's going to be. I don't think the USD will continue to pump up very, very much longer, especially if there's nothing done to nip the debt in this 28 trillion debt in the bud. Yeah. So that's all I have, Paul.
Cheers, Alexis. Thank you very much for that. It continues to be an interesting old market we look at.